on land development under GST and relevant important judgments by CA Sagu Ramakrishna Garu. Before moving on, let me play a Institute motto song. No need to stand up, just place your hand on your chest. On land development under GST and relevant important judgments by CA Sagu Ramakrishna Garu.
Ramesh, play it again. Okay, sir, please move on to session. Ramesh, play it again. Okay, sir, please move on to...
Thank you. My request Chairperson Seta Shireen Garu to give her opening remarks on today's session.
Respected today's speakers, C.S. Ramakrishna Garu and colleagues at Managing Committee and other fellow members, a very good evening to one and all. My hearty welcome to you all for the VCM on land development agreements under GST and relevant important judgments. This is the last VCM in series of VCMs conducted by Vijayawada branch from the last 4 days. Thank you for registering for all the 4 days. And as you all know, the Joint Development Agreement, known as JDA, is a contract between landowner and real estate developer to build a new project on the land of the owner. GST applicability on JDA is very complicated subject and involves so many practical implications. Today's speaker, Sangram Krishna Garu, will throw light on the tax implications under JDA, both in the hands of the landowner and the developer. Input and also the input tax credit availability and various other practical obligations. He will throw light on that. And he will also go through important recent judgments related to JDA. I request all the members to clarify all your queries on GST implications on JDA and make use of today's session. Thank you, one and all.
Thank you, madam. Let me brief about today's session speaker. Mr. Ramakrishna Sangu, qualified chartered accountant in the year 2006. He is a graduate in law, postgraduate in Master of Commerce and Business Administration from Andhra University. Post-qualification, he worked with Coromandel International Limited, Deloitte, Huskin and AMP Sales, Chartered Accountants, Hyderabad, Manohar Chaudhary and AMP, Associate Chartered Accountants, Partner, Indirect Taxation from 2011 to 2017. Later in 2017, he retired as partner from Manohar Chaudhary and Associates, and he established R.K. Sangh Associates Chartered Accountants based out in Vizag, which is exclusively into the practice of indirect taxation and RERA. He has 16 years of specialization in central excise, customs, service tax, VAT, and CST. He was co-opted as a member of Indirect Taxation Committee of SARC ICI for the years 2016 to 17, 17 to 18, and 2018 to 19. He was a chairperson for Taxation Committee of the Andhra Pradesh Chamber of Commerce Federation and Industry for the years 2016 to 2019 and for the term 2020 to 24. He is a renowned faculty for students of ICI, ICMEI, and ICSA, as well as member of ICI, ICMEI, and ICSA for the subjects indirect taxation. He is a GST advisor for more than 10 central and state public sector undertakings and for more than 15 listed companies. He acts as an arbitrator in the matters relating to service tax, central excise, and GST. With this brief, I hand out to you, sir. Over to you.
Thank you, sir. Thank you for the introduction. We'll straight away catch up with the session.
Okay.
The screen shared.
Yes, sir. It's visible.
Yeah. Okay. So, good evening, all the members. So today's topic is a very specific topic relating to land development. That is development of land. That is conversion of a raw land into plots and then selling, whether it is taxable or not, or what are its GST implications. It's very interesting. You can see on my hand, show cause notice. Okay. So I'm presently dealing with this. I have many notices on my table, which are particular to the topic that we are discussing now. So not only in Andhra, but across India, show cause notices have already been served on this particular topic of development of land and selling of plots. Let us see what is this and what are the notices about, what they are asking, why they are raising demands on the SSCs, etc. Now see, so from the very beginning, not especially in service tax law, but in GST law, because of the definition of this service, I mean the scope of service, the scope of supply as per section 7, which says the term supply includes all forms of supply. First of all, it says inclusive manner. The term supply includes. So it tries the scope of the provision is very wide, and it further says all forms of supply. It doesn't specifically say what is supply, but it says the term supply includes all forms of supply, such as sale, exchange, barter, etc., 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 by one person to another person for consideration. So long as if a person is doing something to another person for something in return, you can comfortably fit that into the definition of the term scope of supply. So therefore, in that context, there are huge debates went on and going on whether development and sale of plots by the developers are chargeable to GST. See, with respect to construction and selling of residential or commercial apartments, there is a beautiful notification number 3/19 CTR, which talks about almost every aspect relating to the taxation of construction and selling of apartments, whether it is residential or commercial, land owner share, development rights. Okay, read with 4/18 CTR. So more or less there is a clarity on construction and selling of residential apartments, but similar clarity is missing with respect to development and sale of plots. Moreover, as I mentioned, there are notices being issued across the country asking the developers to pay GST on development and sale of plots. Fortunately, on in the month of August 2022, the Central Board of Indirect Taxes has come out with a circular number 177/9/22. It tried to clarify the implications of GST on land development, but not fully. It is vague, I would say. It is vague and it is incomplete. It has not answered many questions. Still, there are many questions which are left unanswered. That's what we are going to discuss now. Now, in the case of development and sale of plots, the transactions can be divided into two classes based on whether the land being developed is owned by the developer or is it taken under an agreement called joint development agreement with another person called landowner. Okay. So in the case one, where I am the developer, I own the land, I develop, I will sell my plots to outside people. What is the GST implication? It is fairly simple. And in the context of the recent circular, there won't be much tax implications in the case of development of plots by a person who owns land, his own land, or he outrightly purchases the land and goes for a layout development and selling the flats. Outrightly we can say it is not chargeable to GST in the context of the recent circular. But the complicancy comes in case of JDA, Joint Development Agreement. Similar to what we see in the case of construction of apartments, where the builder enters into an agreement with the landowner and they jointly enter into an agreement called Joint Development Agreement, by which they agree to share the constructed flats along with cash or both. So if the venture consists of 100 flats, the joint development may say 50% landowner share, 50% developer share, and accordingly they will share the constructed flats. And now what is the taxation? What are the GST implications? You can refer to notification number 3/2019, which is very clear. But what about land development? When a developer of a land or a layouter enters into an agreement or joint development agreement with the landowner and agrees to share a certain amount of constructed flats with the landowner, what are the implications? In those kind, that is called class 2 or case 2, the following are the transactions. One, there will be a transfer of development rights by the landowner to the developer. This is transaction number 1, which is originating from the landowner. The landowner transferring the development rights to the developer, whether it is taxable. Case number 1, situation number 1. Situation 2, then activity of development takes place and then followed by sale of plots by the developer to his customers out of his share. Let us say 1000 square yards is the total development, out of which 600 square yards belongs to developer. That is, by virtue of the joint development agreement, the landowner agrees to forego 60%, that is 6,600 square yards to the developer, and for developing the land, the developer has to develop 400 square yards and give it to the landowner. Now, out of the developer share, I got 600 square yards. Now I am selling my share. What are the GST implications? Next, handing over of developed plots to the landowner. It is like simply called landowner share. It is very popular in construction of apartments where the developer or the builder agrees to share agreed number of flats with the landowner share. What are the GST implications? And then sale of plots by the landowners handed over to the landowner. Now the landowner in turn selling his share of plots to his customers. What are the GST implications? So in each of the 5 elements, let us try to understand what are the GST implications. What is the circular issued by the CBIC 177? What it talks about? Okay, let us see. Now, first one, development and sale of plots. Now, it is very relevant to discuss the circular 177/9/22 dated 3/8/2022. What it says like this: land may be sold either as it is or after some development, such as leveling, laying down of drainage lines, water lines, electricity lines, etc. What the circular says, it is clarified that sale of such developed plots or developed land is also a sale of land. So whether you sell a raw land or you sell a developed land, the circular says it is the same. You are selling the land. Therefore, it is covered by serial number 5 of Schedule 3. What is Schedule 3 serial number 5? Sale of land. Sale of land is neither a supply of goods nor a supply of service. That is what Schedule 3 serial number 5. And says accordingly, it does not attract GST. That is what the circular says. So therefore, where the developer owns the land, he owns the land and he develops the land layout, make it into plots, and he sells to his customers, it is not chargeable to GST. This clarification has come from or issued on 3rd August 2022. But even before that, department has issued show cause notices stating that even the selling of the plots by the developer, even out of his own share or out of his own land, that is also taxable. Thinking that you are, whatever you are developing, the development you are taking, that you are doing, like laying of electricity lines, roads, other infrastructure, etc., that should be a service component you are providing to your prospecting buyer. Therefore, it is taxable. But now that doesn't hold good in the context of this circular. So whenever you are selling a plot, it should be outside the scope of the GST. One can use this circular to answer the show cause notices, if any, received on this aspect. Now, what is complicated is joint development agreement. It is relevant in this context to discuss some provisions of the RERA. You see the definition of project ZL, 2ZL. It means real estate project. Project means real estate project as defined in 2ZN. Now the next question is, what do you mean by real estate project? Real estate project means, this definition is very, very important, and department is issuing and deriving the logic from RERA and issuing notices. Why this is very, very important, I'll just read it out and leave it there, and I will reconnect to it at the relevant slide. It says development of a building or a building consisting of apartments, or a converting an existing building or part thereof into apartments. So far in the first 2 lines, it's talking about building, development of a building, or a building consisting of apartments, or converting an existing building into apartments. They're talking about apartments. Now you see this is relevant. Or the development of land into plots. The development of land into plots or the development of land into apartments, as the case may be, for the purpose of selling all or some of the said apartments or plots. Underline the plots. So therefore, and that is why we are registering under RERA. Many of you might be doing this RERA registrations and all. We are going for registration of even land developments, that is the layouts. Okay, with more than 500 square meters of area, we are registering them. Why? Because the real estate project includes conversion of land into plots. Okay, now we will leave it there. Now next we will go. What do you mean by promoter? Includes a person who constructs or causes to be constructed. Okay. Okay, fine. Just keep this in mind. Now, let us evaluate each questions that we raised in the second slide. First one, whether transfer of development rights by a landowner under a joint development agreement would be liable to GST, question mark. So, what we are trying to analyze is whether the development rights transfer, that is the transfer of development rights by the landowner to the developer are chargeable to GST or not. See, we all know, or we should know, to start with notification number 4/2018 dated 25th January 2018. You may refer this particular notification. This is very interesting notification. For namesake, it is a notification, but it gives a clarification. What it says, what is the time of supply, that point of taxation, with respect to the transfer of development rights by the landowner to a promoter. This is the first question that is answered by the notification. What is the time of supply for transfer of development rights by the landowner to the promoter? What is the time of supply? Second question, what is the time of supply with respect to discharge of liability of GST liability on the landowner's share by the developer? What is the time of supply? And the answer is, for both these transactions, the time of supply is the date of OC. To be precise, it uses the word not later than the date of occupancy certificate. So that up to date of OC, you can wait and you can discharge the GST. So what the notification says, 4/18, it doesn't say that transfer of development rights are taxable. It doesn't say that, but it says what is the point of time at which the GST on transfer of development rights is payable. That means what? Indirectly, it says, it assumes there is no need to specifically answer you about, who can see this transcript reading now? It specifically discusses about you are liable to pay. I'm telling you when, what is the time of supply, when you are liable to pay the GST, and it is not later than the OC. So therefore, why I'm trying to bring 4/18 is transfer of development rights by a landowner to the promoter is chargeable to GST in the case of apartments. Because 4/18 read with 3/19 CTR, 3/19, it is very clear transfer of development rights are taxable. But now the question is, whether the transfer of development rights with respect to the land development layouts is also chargeable to GST. Let us see that. For that, you may refer notification number. First of all, the circular which is issued in the context of land development 177/22 is silent about it. It doesn't say anything about whether transfer of development rights by the landowner to the developer are taxable or not. It doesn't say anything about it. It is only our interpretation. You refer 13/2017. What is 13/2017? It's a reverse charge notification. In 13/2017, you refer serial number 5B. What is the serial number 5B says? It provides that services supplied by any person by way of transfer of development rights or FSI for construction of a project by a promoter, the GST thereon shall be paid by the promoter under reverse charge mechanism. Just a minute. So what it says is 13/17 says, was point number 1, transfer of development rights are taxable. Point number 2, transfer of development rights are taxable in the hands of the promoter, not in the hands of the landowner. Point number 3, to which transactions this serial number 5B of 13/17 is applicable. To which transaction? It says services supplied by any person by way of transfer of development rights for construction of a project by a promoter. Now the same 13/2017 defines what do you mean by project. It says the term project means is the project as defined under the RERA. Now what is RERA? What does RERA says? Now see, what does RERA says? RERA says project means it's a real estate project. Now the next question, what is real estate project? Real estate project means and includes development of land into plots. So therefore, coming back here to 13/17, which refers to the word project, and the term project includes real estate project, and the term real estate project includes conversion of land into plots. Thereby, 13/17 is applicable even in cases where there is a transfer of development rights by the landowner to the developer of layout to developments or conversion of land development, land into plots. So that is the interpretation. So 13/17, as per 13/17, transfer of development rights by a landowner to a promoter, a land for conversion of it into plots is chargeable to GST, and the GST thereon shall be paid by the promoter, that is the developer, under reverse charge mechanism. Okay, so we conclude that it is taxable. Now you may ask a question, sir, as per notification 3/19 read with 4, 5, 6, 7, 8, transfer of development rights are taxable, no doubt, even in the case of apartments. See, 3/19, 4/19, 5, 6, 7, 8/19 discusses the GST implications on construction of apartments. There it says transfer of development rights are taxable, point number 1. Point number 2, however, if the transfer of development rights are for construction of residential apartments, it is exempted. It is exempted from payment of GST. So therefore, in the case of apartments, if it is for residential use, there is an exemption from payment of GST in the hands of the developer if it is used for construction of residential apartment. But similar exemption is not or is missing in the exemption notification with respect to transfer of development rights for conversion of land into plots. So therefore, it appears that transfer of development rights with respect to the land development are chargeable to GST without any exemption in the hands of the developer under reverse charge mechanism. And department already started giving notices on that. So this is question number 1. So one question we answered is whether transfer of development rights by the landowner to the developer for conversion of the land into plots, whether GST is payable. And our answer is yes, GST is payable on transfer of development rights. Point number 2, as per notification 13/2017, the liability is not cast on the landowner, but on the developer under reverse charge mechanism. Therefore, the developer has to pay GST under reverse charge mechanism, and the landowner has nothing to do with it. Next, let us go to the next question. Whether development services provided by the developer to the landowner under a JDA attracts GST. That means landowner share, total 1000 square yards, we entered into a joint development agreement. Developer share 600 square yards, landowner share 400 square yards. Now I am developing 400 square yards of site, a raw land into a developed land plot and handing over to landowner. Whether this transaction of developing the 400 square yards for and on behalf of the landowner, whether attracts GST. For that, again, the circular 177 is silent. But development of land for the landowner is a supply of service, and it is not a sale of land, as land is already owned by the landowner. Sir, if at all, if the developer wants to claim exemption, he can say, I am transferring the land. But in this case, what you are doing is only developing the land, because the land is already owned by the landowner. Okay, there is no question of selling of land by the developer to the landowner. So what you are doing, you are taking a raw land from the landowner, you are laying roads, you are laying electricity, you are constructing water tanks, X, Y, Z, and giving it back to the landowner. Whether it is a service, you can refer section 2(102), clause 102 of the GST Act, which defines what do you mean by service. It says anything other than goods. Anything other than goods from one person to another person for a consideration. Okay, it is a service. Now look at this situation here. Here, the land is owned by the landowner. I am the developer and I'm doing something. I'm doing something. That something is called development activity. I'm doing something for something in return. What is that something in return? I'm developing 400 square yards to you. I have to give a developed plots of 400 square yards in consideration of receiving a raw land of 600 square yards. For me, doing the development activity to you as a landowner, I'm doing something for you. I'm receiving something in return. And that something in return is nothing but the 600 square yards of raw land. That is a consideration for me for developing 400 square yards of land. So here there is another person called landowner for consideration. Consideration is 600 square yards. So therefore, it is fitting within the definition of the service, and hence GST is to be paid by the developer again on development of 400 square yards to the landowner. So there are two GSTs which are coming into place now. One, the developer will be paying GST on transfer of development rights by the landowner to the developer under reverse charge mechanism. That is one. Number two, he is again, see, the first one is input service. The transfer of development rights is an output service to the landowner and is an input service to the developer. So developer is paying GST because 13/17 poses a responsibility on me to pay GST under reverse charge mechanism. So therefore, that is an input service, input GST. And the second one, that is for providing the services of development of land to the landowner, I am liable to pay GST, which is my output service. So the first one, that is the GST being paid under reverse charge mechanism, you can claim as an input tax credit, and you can use that for payment of output tax payable on development activity done to the landowner. Okay. The story doesn't end there. The next question is, sir, when you are saying that development of land into plots is chargeable to GST, what is the classification? under which classification of the service the developer is liable to pay GST. Point number one. Point number two, what is the rate of tax applicable to it? Obviously, the classification decides the rate of tax or exemptions applicable to it. Now, there is no hard and fast rule here, but various advanced rulings, only advanced rulings are there as on date. There are no any decided precedents on it. It says the developer, what is providing is called development of land, which involves both material like steel, cement, sand, iron, etc., material and labor. And this service is in relation to an immovable property. Now you can go back to the definitions part and read the definition of works contract. It says construction, repair, renovation, etc., 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 in relation to an immovable property. So therefore, it is classifiable as a works contract service. So the services provided by the developer to the landowner, that is the development of land, is classifiable under works contract service. Okay. Then what is the rate of tax applicable for works contract services? You can go to the rate notification and see the serial number 3. It talks about construction services and rates of tax. That 5%, 1%, they are all applicable for construction of apartments, that is affordable housing or affordable apartments or other than affordable apartments, and then commercial apartments, and then government works, and then construction of dam, rail, train, metros, etc., etc., etc. And the last is other works contract services. And the rate of tax applicable is 18%. So don't come to a conclusion that we are doing something in relation to construction of land, construction relating to immovable property. So 1% may be applicable, 5% may be applicable. That is not the case. You are not doing construction of residential apartments to avail the lower rate as prescribed under 3/19. But it is a works contract service. 18% is the rate of tax. Okay. So the developer, as far as the developer is concerned, he is providing both taxable supplies as well as exempted supplies. What is taxable supply? He is providing development services to the landowner, which is chargeable to GST. And on the other hand, he is selling plots, developed plots to his independent buyers, which is not chargeable to GST because of the circular. The circular says sale of land, whether before development or after development, still it is a sale of land. Therefore, it is exempt. It is neither supply of goods nor supply of service, falling under Schedule 3, Para 5. So you need not pay GST on that. On the other hand, development of land for the landowner, it is a taxable supply. So he can claim input tax credit with respect to the materials, etc., etc., used for developing the landowner share, along with the input tax of GST paid under reverse charge mechanism with respect to the transfer of development rights, and you can use it for payment of his output tax. See, the major challenge would be, whether it is for the department or for the SSE, is the valuation. See, unlike construction of apartment services, where valuation of landowner share is specifically mentioned in 3/19. It is the value of the similar flats. For example, there are 10 flats in a venture. 6 flats belong to the builder, 4 flats belong to the landowner. Now the question is, what is the valuation of this landowner share, so that I have to pay 1% or 5% GST? For that, 3/19 is very clear. The value shall be the value of the similar flats, that is similar to the flats which are being given to the landowner. The value of the similar flats being sold by the developer to his customer, independent person, other than related party, that value shall be taken, multiplied by number of square feet or number of flats given to the landowner, you arrive at the value of landowner share. On that, you apply 5% or 1%, you pay GST there. But unlike that, there is no valuation mechanism at all to value either the development rights on which the developer is liable to pay GST, nor there is a valuation mechanism to discharge the GST on development activity carried on by the developer to the landowner. There is no hard and fast rules. Then what may happen? What may happen? Now, this is the challenge. This is the litigation. This is where litigation will come. Litigation will definitely come. Litigation will definitely come because department says for discharging liability both on transfer of development rights as well as the plots being given to the landowner, it says the value of the similar plots. The value of the similar plots which is sold by the developer to his customer. Then the value will be huge. For example, out of 600 square yards, if he is selling a particular one particular square yard for, let us say, 10,000 rupees, then both the transfer of development rights value, that is the TDR value, as well as the landowner share value will be is equal to 400 square yards into 10,000 rupees. On that 18% he has to pay. But it seems to be illogical because the plots that I'm handing over to the landowner, includes the value of the land along with development value. Correct? So it includes the value of the land or the cost of the land. You cannot charge GST, one may argue. You cannot charge GST on a value which includes the cost of the land. Correct? Then one question may arise. So then 3/19, which talks about construction of apartments, the selling price, there also it includes the cost of the land. But remember, 3/19 gives an abatement. You see the rate notification, it gives an abatement of 1/3 of the total selling price towards the cost of the land. Consequently, your effective rate will become 2/3 of the original rate. See, actually, other than affordable housing apartments, the rate of tax is 7.5%. But we are all calculating 5% only. Why? Because out of the 7.5, 1/3 is towards abatement to the land cost, and consequently you are charging 5% or 1% as the case may be. But similar provision is absent in this case, but still department is giving show cause notices based on the value of the similar flats sold by the developer to the outside parties. Even the show cause notice on my hand talks about the same thing, and they are demanding GST. But then you may ask, sir, what would be the contention? What would be the contention for the SSC? For your client. See, one ideal approach would be for discharging GST on landowner share. One ideal approach would be, see what you are doing actually. What is the activity that you are doing for which you are liable to pay GST? So the activity that you are doing is development of land, conversion of a raw land into a developed plot. That is what you are doing. That is what is called service for which you are liable to pay GST. Then I may ask, or I may suggest my client, identify the development charges per square yard with reasonable profit margin, maybe 8%, 10% max, into number of square yards given to the landowner.
Sir, sir, no audio is coming.
Could you hear now?
No, it is okay, sir.
Okay. So I'm repeating. The ideal approach would be to identify the development cost or development charges which are incurred or being incurred towards the 400 square yards and charge 18% GST on that under works contract services. And you can claim input tax credit. You can claim input tax credit by following Rule 42 and Rule 43 because your part of your output is exempted, part of your output is taxable. So therefore, accordingly, you can calculate Rule 42 and claim ITC. This is what we are suggesting to our clients. The next question is time of supply that I'll discuss in a short while. There are, you can see a number of case laws, Authority for Advanced Rulings, Kerala, Gujarat, Maharashtra, Telangana, Haryana, Delhi. You can see a number of cases where majority of the cases where they held that, you know, the development activity in the case of land development is taxable. That is what the AAR says. As of now, we have only AARs. There are no any tribunal or tribunal itself is not there. There is no question of having tribunal judgments. Now,
Sir,
how
sorry
we
to
should
disturb
be,
you.
yeah.
Sir, can you please repeat? One member is asking to repeat slide 8, sir.
Yeah, I will explain. So I'm discussing here in slide 8, what would be the valuation? Once we have come to a conclusion that development activity being done by the developer to the landowner to the extent of the landowner share is chargeable to GST. On the other hand, the sale of plots by the developer out of his share to his customers is not chargeable to GST. Okay, now when you say it is, you are liable to pay GST on the landowner share, the next question is, what is the value on which I am liable to pay GST? We have already discussed the classification of the service also, that is the works contract service. I know the rate of tax, which is 18%, but now the question is, what is the value? Why we are discussing about the value? Because it is a non-monetary consideration. There is no monetary consideration involved. Therefore, we have to identify the value of the service, for which department department is coming out and saying that it is the open market value of the plots that you have developed for your landowner. I'm repeating, it is the open market value of the plots that you have developed for the landowner. But our argument is that as a consultant, our argument would be, if you take the open market value of the developed plot, it includes the value of the land. Whereas para 5 schedule 3 says the sale of land is not taxable, and more importantly, in the instant case, the land is owned by the landowner. It is not owned by me, nor I being selling any land to the landowner. So in that case, what would be the ideal situation? What we are suggesting to our clients is that you take the development charges. What is the development cost incurred per square yard, and multiply that into the number of square yards which is being given to the landowner. Accordingly, you arrive at the valuation of the landowner share, and then you can pay GST at the rate of 18% on that particular value. Hope I am clear. Okay.
Sir,
now,
one member asking, is it some questions will you take up now, or
contract is settled only by exchange but not in cash? See, it is interpretation. Okay. And that is why I clearly mentioned it will become a litigation. The valuation adopted by the SSC and the valuation being proposed by the department obviously will vary. Department will certainly take a stand that the value will be the value of the similar plots sold by the developer nearest to the date of joint development agreement. This will be the argument by the department. There cannot be any hesitation. But what we are saying is how that can be correct. How that can be correct when the land itself is not owned by me. It is the landowner who owns the land. And if you adopt the value of the similar plot, it includes the cost of the land, which I am not selling any land to my landowner. Therefore, I will go with development charges. On the other hand, and see, when you have taken the development charges as the valuation basis, it becomes a litigation. I am not saying that it will not become litigation, department will accept, etc., etc., but it will be litigative, and department will obviously give you a notice stating that the valuation mechanism adopted by you is wrong, that you have to fight it out and come out. And we are very confident that courts will not accept the value of the similar plot because the plot is owned by the landowner. So what you have done is only value addition by way of service of development of the charges. Next, see now I'm giving, see, having said that, if your client want no litigation, your client boss, your client says, sir, I don't want any litigation. I want to be free from all I don't want any notice to be received from the department. In that case, he can go ahead with the value of the similar plots. For example, out of the 600 square yards, if the developer is selling a particular square yard nearest to the JDA, that is the first plot sold, around 10,000 rupees, then 400 square yards into 10,000 rupees into 18%, he can pay by using the input tax credit and he can come out of it. But if your customer or your client says that no, I don't pay, I will take some amount of risk, you can suggest this. But having said all this, now I am in this last slide, I have put everything which is the department perspective. How department may or probably will take stand, what stand that they will going to take. These are the points. 1, services provided by the landowner to the developer in the form of transfer of development rights are taxable. We agree. Yes. The services of development of land by the developer to the landowner are chargeable to GST in the hands of the developer under RCM. Yes. The services of developer would be chargeable to tax under the classification works contract services, most probably. The developer shall be eligible to claim ITC of input services used for providing the output service of works contract. One has to agree. But here one may differ. The value of landowner share shall be the value of similar plot sold by the developer nearest to the date of JDA. See, recently, 1 minute. 1 second. Recently, I have come across with a case where department has proposed, this is an intelligence case, this is a DGGI case, where department proposed GST on a developer. They issued a show cause notice stating that the value shall be the value of the developed plot, the value of the developed plot. Unfortunately, the SSC given a reply to the show cause notice, interestingly, stating that he agreed the liability. He agreed the liability to pay GST on the development services provided to the landowner. And then the interesting reply is that, sir, I will pay GST, I am liable to pay GST, but not on the value of the developed plot, but it is the value of the raw land that the landowner has given me to develop. See this case. See, in this case, the developer himself is accepting that I will pay GST on the landowner. Then you may have get a doubt that, sir, what is the logic on the SSC, from the SSC, in accepting the land value for payment of GST? See, I have seen many people, organized people, they are paying GST like this. Their understanding is that, see, for developing 400 square yards, what I am receiving? For developing 400 square yards, I am receiving 600 square yards of raw land, right? So for doing something, that something in return is in the form of 600 square yards, 600 square yards raw land. Therefore, they are paying GST on 600 square yards of raw land. This is unfortunate. Okay. The SSC should not have given a reply like that. Rather, he would have contested. Now the department is also proposing, maybe in that case, they may accept also. It's not a big deal. But that is how it is going on, because it is uncertain. Nobody knows the law properly. But we are not doing like that. We are discharging GST for our clients based on development charges. We are 100% confident that what we are doing is only development. What we are doing is only development. So more than that, I am not liable to pay GST. Yeah. Let me share that thing. Yeah. And the next one is the time of supply. I said I kept this point to the last. What is the time of supply? At what point of time? At what point of time one has to pay GST on developer share? For that, what the department says, let us see first. What the department says is that, have you raised invoice? What the department says is, have you raised any invoice? All we know that no developer or the builder will raise a proper tax invoice on the other party. Even in the residential apartment case, you might have seen none of the builders are raising tax invoices. Now, they are saying, if you have raised the invoice, it is the date of invoice. If you have not raised the invoice, it is the date of provision of service or receipt of payment, whichever is earlier. It is the date of receipt of payment or date of provision of service, whichever is earlier. Interestingly, what is the receipt of payment here? That is the consideration. The consideration is received in the form of development rights. And the development rights were received long back. And in fact, that is the point at which, the transaction, the entire transaction of development has come into picture. Therefore, department is saying the date of JDA will be the time of supply. Date of providing, entering into the JDA will be the time of supply. Accordingly, they are asking to pay GST along with interest. So your client should be very cautious and you should be giving proper tax invoices to the developer, to the landowner. One of the questions is whether GST paid under reverse charge mechanism on the TDR, whether it is eligible as in input tax credit. Yes, it is very much eligible. But the TDR GST that you paid belongs to the entire project. It belongs to the entire project. So you have to apply Rule 42 to take the credit proportionately. And you can use that for payment of your output tax. And the valuation will be the same, because the valuation will be the same. That person is correct, because it's an exchange. See, in exchange, the value for the consideration for both the parties will be the same. Whenever there is an exchange transaction, the consideration will be the same. Yeah. See, in fact, I thought of adding more slides, but I had problem with my throat, so I could not add some more slides. But still, I would like to take up any questions on today's topic.
Sir, a lot of questions.
Yeah, please.
And one member, Satish Gari, you can unmute yourself and speak, sir.
Ramkrishnan sir, good evening, sir. How are you?
Namaskaram, sir.
Namaskaram. How are you, sir?
Yeah, fine, sir. Fine.
I have got a couple of queries on this development of residential apartments, sir.
Apartments, huh? Okay.
Residential apartments. As per after receipt of an objection certificate, and was completion certificate, sir. My point of view is even builders should pay even after completion certificate, sir. According to what the notification 4/2019, which you have said. Am I right, sir?
See, that payment of GST after OC, in fact, technically speaking, after OC, GST on sale of flats is not payable. It is exempted. Okay. Whether it is own land case or JDA case, it is exempted. JDA. I'll come to that. But having said that, if it is a JDA case, joint development agreement case, it says from the very beginning, transfer of development rights are taxable. Point number 2, transfer of development rights are taxable in the hands of the developer. Now, see, I'm talking from residential apartment point of view now. Let us not link this with today's discussion. Now, in the case of flats, transfer of TDR taxable in the hands of the builder under reverse charge mechanism. But then it says it is exempt if it is for residential purposes with a condition. It is exempted with a condition. What is the condition? The condition is that all the flats in the apartment should be sold before OC. Should be at least booked before OC. If it is not booked before OC, the exemption granted earlier will be withdrawn.
True.
Proportionately. So the 3/19 is allowing exemption to the builder on payment of GST and reverse charge mechanism and TDR, provided if it is for residential apartment construction. Secondly, with a condition that all the flats should be sold before OC. Forget about landowners here. Anyway, they are liable to pay GST. That means coming to the developer share, he has to pay the GST. He should have sold his share before OC. But what happens if there are some flats which remain unsold, unbooked as on the date of OC? Then it says you are liable to whatever exemption granted earlier on development rights will be withdrawn proportionately. So out of the 10 flats, if 2 flats remain unbooked, now into 2 by 10. The GST which is exempted earlier, X into 2 by 10 will become now taxable.
That's true.
Having said that, it says, further says, however, the tax payable on account of this cannot be more than the GST that would have been paid had the 2 flats been sold before OC.
Okay.
So therefore, whichever is lower will come. And obviously, 5% or 1% of sale price of 2 flats will be lower. That is payable. But that is payable under reverse charge mechanism, under the classification TDR.
As per 4/2019.
Therefore, sale of flats after OC is still exempted. But they are collecting GST in the name of TDR, which is equivalent to GST payable on those 2 flats.
Yes, true.
So therefore, you cannot collect GST from the buyers of those 2 flats.
But
rather, you have to include it in your cost of or selling price and collect as a selling price, but not as GST. So do not collect GST from your customers for the unsold flats in case of GDA, but still you have to pay, include it in the selling price and pay. Now,
so
bottom line is that directly or indirectly in the case of JDA, every flat in the apartment suffers GST.
That's true.
Yes.
But no client is accepting, sir. No client is accepting my version, and
that is a different story altogether.
And
this is
they are not. I mean, not even clients, sir. Even there is a difference of opinion between chart accounts also.
Sir, last in the 4 months back, I have spoke to Credai in Novotel. Okay, there one of the departmental officer himself says not taxable. Okay, so there is a difference of opinion between the department also, with department and us also.
That's true, sir.
Yeah.
One more thing, sir. One more query. This is also with respect to JDA only. If a landowner sold his share of flats before OC, GST needs to be paid, no, sir. GST needs to be. But
yes.
he don't have any GST number. Landowner doesn't have any GST number. Can it be considered as B2C and RC, sir? Can it be considered as B2C and RCM can be applied, sir?
No, sir. When an SSC whose turnover, aggregate turnover is more than 20 lakhs rupees, section 24, he has to mandatorily register. So he has to register and he has to pay GST out of his pocket from his TIN number only. Nobody else can pay. Even if somebody else pays in this number with respect to the landowner share out of, landowner selling these flats to outsiders, again notice will come to the landowner. Even at that time, he has to pay GST from his pocket, from his TIN number only.
But sir, with respect to 11/2017 notification, they are saying that GST registration for landowner is not mandatory.
No, where, sir? Who said?
In notification.
See, that is for TDR.
TDR. Okay, yes, true. TDR.
For TDR, the liability is on builder under 13/17.
Okay.
When the liability to discharge GST on TDR is on the builder, for that aspect, he need not register. But when he receives his share of flats from the developer and he starts selling, he has to apply for registration and pay.
As he is selling before OC. Am I right, sir?
Yes.
Okay.
And in fact, he must be registered in order to get input tax credit of GST charged by the builder. Otherwise, he will not be able to claim ITC.
But this is also not being accepted by clients.
Sir, pickpocketing is a crime. Okay, as per the Indian Penal Code, but people will do it. At appropriate time, they will be caught. They may not be caught also.
So our responsibility is to educate the clients.
That's
they
all.
may or may not listen.
Obviously, we cannot commit mistakes.
So only we are just inboxing them, sir. So only we are mailing them.
Yeah. Let us discharge our duties.
Yes, that's true. Okay, thank you, sir. Thank you.
Yes, sir.
Yeah, madam.
There's some more questions in the chat box. Can you please go through?
If an individual owns a plot of land and wants to sell it, no GST. No GST on sale of land
sir?
or plot. Answered, madam.
And some more questions. Sir, by M. Gopal Krishnan.
Yeah.
Developer has to pay GST on RCM basis for the development, and he is eligible to avail inputs for the material or service used for the development. However,
Proceed.
However, for selling of developed plots is exempted from GST. Now the developer eligible to get the refund or not?
No. Sir, refund section 54 will be given for zero rated supplies or SEZ supplies or inverted duty structure or excess payment only. In no other case, refund is possible. That's all.
And one more question from the member. 600 square yards value GST on RCM as input service. The same value as the output service, same GST. Is my understanding correct?
Yes.
First, if you have any further questions, please unmute yourselves and can speak.
Builder will pay GST and RCM and works contract, but flats are tax. See, somebody is asking. Madam, seminar lo webcam నేను చేస్తాను. Yeah, see, somebody is asking a question. See, please don't link construction of flats to the development of land. See, in the case of construction of apartments, the builder cannot claim any input tax credit. Any. Under the new scheme for the ventures commenced on or after 1/4/19 or ongoing projects as on 1/4/19 for which old new scheme has been opted, there is no question of claiming ITC. So whenever you are paying 1% or 5%, whatever input taxes that you are bearing, it is only a cost. Okay, I think it is Lalit Dalvi and Associates. Okay, so therefore there is no question of taking. What is the date of supply of development services? I discussed this. It is in the last slide. It is the date of invoice. If the invoice is not issued, date of provision of service or joint development agreement, whichever is earlier. Sir, you told of taking proportionate ITC on RCM TDR. Please throw some light on it. Yes, because in our example, 600 square yards are exempted, 400 square yards are taxable. So you cannot take full ITC benefit. You can take only to the extent of taxable sales as per section 17.1 read with 17.2, read with rule 42, read with rule 43. That is called proportionate credit. If a person wants to sell their apartment, does GST apply? No, because by that time he is not first of all a builder, and his apartment, you are saying, I will assume that the building has already got occupancy certificate, therefore it is not taxable.
Questions from the members? Thank you, sir. As I said in the beginning, this is a very complicated subject, and it involves so many practical implications. However, you have your excellent presentation with detailed PPTs and demonstrated various case laws. So I think most of the doubts of our members will have clarified, and definitely it will be the knowledge enriching session for our members. Thank you, same to you. Thank you, sir, and
Thank
also.
you.
Thank you, members, for joining for the last 4 days. We are doing VCMs, and thank you for joining for all the days. And about the coming programs, on January 30th, we are having the MSME Startup Samvad physical program at ICA Bhavan Vijayawada branch, and it will be on startup valuations and startup funding, and it is also investor awareness program, and we are involving 5 colleges, MBA students, and also Chamber of Commerce, Andhra Chamber of Commerce, and other service organizations. And it will be definitely a good program and very useful program for the persons who are going to start up, going to start the business, new businesses. And please share the information to your clients or friends or whoever it may be, who are going to start up new businesses. And on January 3rd, we are having the VCM on post budget, and by Abhishek Murali sir. Please join for that also. Thank you. We are signing off today. Thank you.
Thank you.